Hey everybody, Ben Hart here, Hart Investment Group. It's June 9th, 2022. Lots going on in the housing market, and so we thought this would be a great time to have Reni McNeil back on from Mortgage Brokers Ottawa. We talked to Renee probably a year and a bit ago now. Market was a lot different. A lot of things have changed, particularly in the last 6 months. Rates and rule changes and housing market pricing changes. So we're bringing Renee on to talk about all these things. So Renee, how are you
I'm
doing
great.
today?
How are you?
I'm doing pretty
Good. Thanks
good.
for having me
Doing
back. I
pretty good.
appreciate it.
Yeah, yeah. Thanks for coming on. So lots of changes happening, and we can cover a lot of things. I'm going to try to keep it a lot shorter this time, but rates have changed a lot in the last 6 months. Maybe you can give us a view on how that's changed, what it looks like, and even what are people doing today? Because I know when we talked last time, I think people were generally leaning towards variable. So if anything's changed, I wouldn't mind hearing that as well. So Renee, maybe you can give us
Sure.
comments.
Yeah, little bit of action going on in the mortgage world for sure. So, rate wise, it's been probably a bit of a scary past month for some people. I feel like, we're regulating out to probably where we should have been for the little bit. Don't get me wrong, I love the, below twos and stuff like that, but we only really saw those, below twos and maybe mid 2% for a little over a year, I would say. We couldn't expect that that was going to maintain and continue moving forward. I mean, it just wasn't feasible. So where we are now, I mean, probably in the past, I'd say 3 to 4 months, we jumped from kind of that category into maybe, depending on if it's a refinance or a purchase and the amount that you're putting down, because like I said before, they're all different categories. We can range
Yep.
from say 3.99 to 4.99 on a 5 year fixed. So quite a bit of a difference there. This is where I think it's probably somewhat of a normal rate range to expect. When I started doing mortgages 15 years ago, they were at 6.5 and 7. So we're still below that. I
Yep.
mean, you hear the stories before my time where 20 some years ago they were 18% or maybe 25 or 30 now. I don't
Yep.
think we're ever going to see that type of rates again. But for
No.
the most
No.
part, like, clients are okay. Affordability might have
Are they
changed for
okay?
some people, but we've been qualifying
Mm.
clients on this 5.25 and 4.79 kind of stress test, a qualifying rate for a number of years now. So we were trying to
Yep.
ensure that when this did happen, knowing that it would eventually, that clients were going to be okay when their mortgages came up for maturity and they went from maybe 2% to now 4.99.
Yep.
Affordability has changed for some because that stress test again
Sure.
is a little different. So, like I said, we were qualifying people on,
Yep.
5.25, even though their rate might have been
Yep.
4. But now what we have to do for that stress test is qualify either at the contract rate if it's less than 5.25. So we qualify at 5.25, it's under, which is really only
Yep.
variables these days, or the
Okay.
actual rate. So you're say 4.5 that you might get for your refinance plus 2%. So we're actually qualifying you at
Okay.
6.5. So some people in that
Wow.
category, can lose a little bit of the affordability that they might have had 2 months ago or a month ago even. So
Sure.
it's really
Yep.
just about talking to your broker, making
Hmm.
sure that you're in the best product. If you've had a pre-approval before the last few
Yep.
weeks, definitely recheck in with your person to make sure those numbers are still accurate. But there's some ways around that qualifying rate, which is most likely
Yeah.
variable. So
Right. Right. Yeah, I've seen in at least the last couple of weeks here where they've talked about, you used to be able to guarantee rates for 90 days,
mhm,
120 days, something
yeah.
like that. And heard that some of the institutions have changed and kind of brought that down to a couple of weeks. Is that
I
happening, or
haven't
is
seen
that
it yet.
more
Yeah,
hearsay?
I haven't seen it yet. So
Okay.
none of our big lenders that we use have sent out that notification yet. So some were always 90, some were always 120, just depending on the lender and kind of their institutional structure that they had. We had
Yep.
have a few that went from 120 to 90, but I haven't seen or
Okay.
heard really of any in my world yet, so that limited it to a few
Yeah.
weeks. Now, what we are seeing is when we are getting formal approvals done, so like a live offer on a home, and we're getting the formal approval done, the commitment has to be
Yep.
signed, sometimes as short as 3 business days. So it used to usually be 10 business days to review the commitment and the approval with the client, sign it, and get it back to the lender. Now the
Yep.
lender's saying we want it back in 3 to make sure we're holding this rate and not holding it for
Right.
nothing and then, taking a bit of a loss if the client falls through on it. So we are seeing that, but
Sure.
not so much the drastic on 90 days down to a couple weeks yet. Hopefully not.
We'll see how long it chops around here. What about are people starting to come to you that have variable? Have you had a lot of questions that say, "Hey, Renee, should we be locking in? Like, what should we be doing now?" Have you had a lot of those questions?
I have, yeah. Whenever there's a Bank of Canada
Yeah.
meeting, I mean, the emails and the calls come
Yeah.
in, and that's to be expected. And that's what I ask my clients to do.
Sure.
Like, if I put someone in a variable
Sure.
rate, I say, hey, let's monitor this. Like, reach out to me. I'll follow up
Yeah.
with you with any news that might be, important to send out to you. So everyone's a little different. I'm a fan of
Yeah.
variable. I'll throw it out there.
Mhm.
I'm a big fan of it. If you look historically over the past 50 years, variable has always come ahead of fixed rates. But you
Yep.
have to be able to have the stomach for it. I don't want my clients not sleeping at night because the Bank of Canada
Sure.
is meeting tomorrow and they're stressing out. So,
Yeah.
the talk is tailored differently for each client that I'm dealing
Hmm.
with. But really what I boil it down to is I say, and of course there's two types of variables. There's a static variable payment, and then there's the variable
Yes.
payment that will change with Bank of Prime. So there's an adjustable rate mortgage and a variable rate mortgage. So not many lenders are static. Some of the big ones are TD and HSBC, where they keep the payment the
Okay.
same no matter if the prime rate increases. So that's a different
Right.
conversation than some of the ones that are variable, which is the majority of what's out there. But I break it down in
Yeah.
dollars. So, the 0.5% that
Yeah.
Bank of Canada increased last year per $100,000 of mortgage, that's like
Mhm.
$24 a month. So,
Yeah.
like break it down. It's Starbucks
Yeah.
for the month, not even.
Yeah. Yeah.
So I mean, not everyone's mortgage is 100,000. It depends if you're three
Yeah.
hundred
Yeah.
thousand or
Yeah.
you're a million. Yes, there's going to be a bit of a difference in payment, but that's what I
Mhm.
do. I break it down
Yeah.
and see what's best for each client. Yeah,
Yeah, yeah, that's a fair
yeah.
point. I mean, I would lean on the side of variable as well from the perspective that my view is that the economy is slowing, and if you look at consensus, they're actually talking about cutting rates in 2023. So I would lean that way as well. But yeah, your point is valid, and I would agree with you. I was just curious what kind of reaction people have, and it seems like there's a lot of, I guess, concern about rates
There is.
rising.
And I mean, we do have the clients that were put in variable 6 months ago, 8 months ago, a year ago, and they're
Yeah,
going, like,
yeah,
shoot, now I could have locked in at 2.5, but I really like that 1.5 at the time and things like that. But,
yeah,
I kind of say, like, hold tight, don't lock in now because, like
yeah.
you said, we are expecting rates to come back down again. So ride this
Mhm.
out and lock in at that time if they drop back down and you want to
Yeah,
concrete that lower rate. But 9 out of 10,
sure.
maybe not 9 out of 10, but a good majority of clients with variables are still well under where we are at fixed today. So, yeah.
Yeah, fair enough. What about appraisals? Because obviously the market is feeling higher rates, and I mean, it tends to lag a little bit, the prices, but we've seen some price
Yeah.
adjustments. So, what about appraisals? How are those doing? Are they coming in pretty much in line? Anything different? Anything that different than you're seeing?
Knock on wood, I haven't had too many that came in under
Eh,
purchase
eh,
price. I did have one last week
Yeah,
that came in, 25,000 under. So again, it's always a conversation with the client ahead of time, make sure that if the appraisal comes in under your purchase price and you waived your conditions, you have the money to cover that difference. We're not seeing too much of it. I think homes are being fairly priced and bid on in the winning bids for the past couple weeks. So I mean, that's not
yeah,
really my area of expertise. I just see the
yeah,
backside
yeah.
of it. But,
Sure.
we have to be prepared to probably see some lower appraisal values compared to what people are offering. Because some people are still in that mindset where I want that house and it's worth, 900 in my mind. And maybe a month ago it
Yes.
would have appraised at that, but now it might come in at 850. So, it's really hard to
Yeah.
say. You have to be prepared for it and speak to your person if you're making an offer on a home and trust your real estate agent.
Yeah,
Hmm.
fair enough. Um, the one of the things I've been reading about too is that lenders are tightening up. So, I mean, you have a lot of lenders to deal with. So, have you seen that? Have you seen kind of changes to what they require information wise? Is that changed, or has it been pretty good so far?
Not yet. We saw
Yeah.
a lot of tightening up at the start of the pandemic. Income
Yes.
wise and verbals for
Mm,
employment verification, things like that to make sure people were still employed. And, with remote working, getting letters and stuff to support that they can actually work remote. So we saw a lot more
yeah.
tightening up then. As of right now, not so
Yeah.
much. Some
Mm,
rumbles are some certain lenders are increasing their rates, a quarter of a percent above everybody else, and that's to slow down the business a
yeah.
bit, which we see
Sure.
from time to time. If,
Yep.
a certain bank gets
Yep.
overloaded, they don't need that side of the business coming in, they'll raise rates and it slows down a little bit. But so
Yep.
far, we haven't seen too much like where they're saying, we're not allowed doing this, you're not doing this, things like that. So it's always a ton of hoops to jump through for mortgage approvals. So yeah.
That is true. What about the lower tier lenders? I don't remember. You call them maybe B lenders or something
Mhm.
like that. Have you seen rates go significantly higher there, or is it pretty similar and lockstep with what's happening with the higher quality
Pretty
lenders?
similar. So, like our B lenders, our
Yeah.
alternative lenders, whatever
Yeah.
category you want to put them
Yeah.
into, they're
Yeah.
still
Yeah.
probably sitting. I would say it depends. Everyone's a little bit different, and it's very case
Sure.
specific. So we can't ever quote a B rate
Yeah.
because it's
Yeah.
based on the client's application.
Each
Yeah.
person.
So I would say they
Yeah.
range
Yeah.
anywhere from say a quarter to a half a percent higher than a standard A lender rate. So it's still not insane, and they're just keeping
Yeah.
pace. They've always
Yeah.
been that way. Usually about a half a percent higher. If
Mhm.
it's a lot of complications in the file, it might be more like 0.75% high or something like that. But no, they're not
Yeah.
going drastically high just to do it for no reason.
Mhm.
We have had a communication from one of our private lenders, so like a MIC, a
Yeah.
Mortgage Investment Corporation
Yep.
lender, that they are
Mhm.
not lending until September. So a lot of the back end
Okay.
investors, I guess, maybe are getting a little nervous, so they're pulling out their private
Sure.
money. But
Money.
again, we've
Hmm.
seen that from time to time. So I don't think it's
Sure.
really necessarily, this environment specific. It just that's the flow.
Yeah. 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 What else are you seeing that's different that I didn't ask you about? Is there something else that's changed?
Um, I mean, it's always a crazy world, right? Like I've been brokering
Yeah.
now or a mortgage agent for 4 years, in the
Yep.
big bank before that for 12. And it's always
Yep.
there's changes in the mortgage market. I love credit, obviously. It's why I do what I do. And really, it's just to have the
Yes.
conversations with your clients. Every client has a different need. It's
Yeah.
not always about the interest rate. So you need to know if they
Right.
might be moving provinces, if they might be selling to
Right.
upgrade. So you might want a variable
Mm.
versus a fix for maybe a lower penalty option if a sale or a move is
y-
applicable in your future. So it's really about
Yeah.
talking to your broker about
Mm.
your specific needs. So not just what's your best rate, what are your needs, and
Yeah.
letting your clients know. Because, I mean, of course, and I'm not bad mouthing the banks, but if you walk into a bank, they're going to try to push a fixed rate. They like fixed. That's what the banks
Yeah.
want. That's how they make their money.
Yes.
So yeah, so you're
Certainty.
not going to get an unbiased kind of recommendation for your specific, needs. Uh, In my case,
Yeah.
I'm just kind of walking in there because,
Yeah.
and not all bankers. I just, I'm going to get some hate mail after this, I'm sure. But talk to your person, tell them what your needs
Yeah.
are, and just have a look. But that's what we're here for, right? I mean, this is what we do day
Yep.
in and day out. I'm here to help my
Mm.
clients with guidance that they need and the best advice that I can, and hopefully they're happy with it.
Right on, right on. Listen, one more thing before we wrap is you did briefly reference the two different kinds of
Mhm.
variable rates, what kind of HSBC does versus the kind of the other variable rate. Can you maybe just simplify that for someone what that would mean and how things fluctuate, principal interest, things
Yeah.
like that?
So basically, with a variable rate mortgage, you're based on a variable rate mortgage. I'm going to mix them up now. It can fluctuate with Bank of Prime. So like we saw that increase last week by a half of a percent. So if you were
Hmm.
prime. 3.2 minus
Yep.
say 1%, your interest rate was 2.2. Now it went up to
Mhm.
3.7. So your interest rate's now 2.7. That's working the same for both options, whether it's adjustable or variable. But what the difference
Okay.
is if you're with the static payment, it's not changing. So what's
Hmm.
going to change when your interest rate changes is the amount of payment, so your $1,000 a month, what goes to principal versus interest. So you're going to be paying a little bit more
Got it.
interest than you did last month because the interest rate went up. With the
Hmm.
adjustable, with the variable one, the one that's going to change on you, that's going to increase
Yep.
according. So that's like that $12 per 100,000,
Yep.
or in this case, a half a
Yep.
percent is $24 per 100. That's going to
24.
increase your
Yeah.
payment. Your lender will always send you
Got
an
it.
email. So your lender, if you're
Got
on
it.
electronic communication, or they're going to send you something in the mail and say, hey, prime rate went up, your mortgage payment's going up
Yep.
by X amount. So,
Hmm.
there's people that would like the static payments, rental properties, maybe people more on a fixed budget, but still wanted that, variable rate product. So it
Yep.
depends on, what's best for each. We just want to make
Yep.
sure that if you're in the one that's static, that if rates really jumped up, nothing that we've seen yet, it's still all okay, but if rates really jump up, that we're checking to make sure that you are paying enough off your principal. So at the end of the 5-year term, your amortization hasn't changed. There's no big kind of balloon or
Right.
lump sum payment that you need to make to keep it in line. But you can do that
Yep.
just by increasing it on your own, $50 or $100 a month, give or take. So again, they're both great products. They both have different needs for different
Yep.
people, but you just need to make sure you need to know what
Yep.
one you're in.
Last question, because you triggered my mind there when you said amortization. I have read that there's been some talk about increasing amortization out to like 40
Mm-hmm.
years. Have you seen or heard any of that yet? Or obviously we can go to 30, which was a change, but
Yeah.
have you heard any talk of that?
Forever. We've heard talk of it since they took it
Yeah,
away.
yeah, yeah. Okay,
It's
sure.
rumbling again. It would be great.
Yep,
At
yep,
least if we had, insured 30 years, so less than 20% down with
yep.
30 years would be great. It'd be a big help for some of the younger people, first time home buyers trying to get in the market. It'll give them a bit more of a stretch on the affordability. I'm hoping. I think we're all
Yep.
hoping. I think all mortgage brokers and agents and bankers are all hoping, but
Yes.
we don't know. Yeah.
We'll see.
Yeah.
We'll see. Listen, Renee, that's been awesome. If people want to get in touch with you, what's the best way to do that?
You can email me, which is a very long email. So my website's Reni McNeil, so RENIMCNEIL .com, ReneeMcNeil.com, or my cell phone number, which most people, text a question or email me or call anytime at 613-447-1297.
Fantastic. Listen, I really appreciate you taking the time today. I think we had a great update there. This housing market continues to change, and I may reach out to you again as this continues to evolve. But I appreciate you taking the time and answering some questions for
No
us
problem.
today.
Thanks for having me.
Awesome.
Thank you.
Thanks, Renee.
Bye.
Just wait. Just wait.